All right, folks, this is the last of our videos for this playlist. We're talking about market orders, we're talking about limit orders, we're talking about day orders, we're talking about GTC orders, we're talking about limit orders, stop orders, and stop limit orders. We're talking about everything. And I'm trying to give you some practical information. There's a lot of books, there's a lot of sources, but I'm trying to put a little tidbits that'll make this a little more reasonable in light of the actual trading environment. So let me talk about day orders. And let me talk about GTC orders, all right? And this is very simple. We talked about market orders, we talked about limit orders, we talked about stop orders, and we talked about stop limit orders. These are all types of orders. What a day order or a GTC order does is it just tells you whether you want these orders open for the day or good till canceled. Good till canceled. Now, you can't place a market order GTC because a market order is supposed to execute right away. Sometimes you can place a market order and it'll execute the next day, but typically 99% of the time, and I know there's platforms that allow you to do weird stuff, and I don't know, I'm not going to get into all of that because it can get really complicated. But generally speaking, if you're placing a market order, the platform either will not let you do it or let you do it and it'll execute immediately. So day versus GTC is not really an issue. Just be careful if you're placing a market order and your platform allows you to place a market GTC order. That means it'll be filled at the next open. You won't know where the opening will be. So your price fill can be subject to many, many surprises, and most people don't like that. So market orders and GTCs don't really mix. So limit order. Let me share some wisdom with you guys. This is beyond what I'm telling you. I started out, I went to law school, then I became a broker, then I started managing money. When I was a broker, I dealt with a lot of clients. That's all I did all day. The biggest problems that traders make is not placing bad trades. The biggest problems traders make is forgetting that they placed a certain order as a GTC order or thinking that they placed an order as a GTC order when it was a day order. And they don't have protection for an existing trade or their stop loss is not there in the system. That's the biggest errors that occur. Trades not being in the system that should be in the system or trades being in the system that shouldn't be in the system. That'll get you more than making trading mistakes. I can promise and guarantee you that. It happens to everybody. It happens to us at least once a week. So, limit order. Be very careful. You can place a day order or a GTC order. Don't forget to cancel it. We do this a lot. We place an order, we want to see a stock pull back a little bit. It's trading at 100, we want to buy it at 90. We place a GTC limit order and then we forget about it. Or conversely, we'll place a day order, day will go by, the order will expire, we still think it's in the system and the order is bye-bye. So always make sure at the end of the day to check all your open orders for your GTC. GTC and open orders are the same thing. Open orders are orders that haven't been executed, that are sitting, waiting to be executed. Usually a day order is not an open order. It could be an open order, but usually an open order is a GTC order. Limit orders, stop loss orders, stop limit orders. Be very careful with these, especially your stop losses. Here's the scenario that comes up all the time. You buy something at 100, you sell it at 110, you put a stop loss at 90, and then you take your profit and you forget to cancel your stop loss. You know what happens to your stop loss? It's now a short entry at 90. Stock trades down to 90, you get filled on a sell stop. This happens all the time. When you cancel your order, when you take profit, cancel your stop loss order, all right? Most people place their stop loss orders as GTC orders. So always forget to place your open orders when you, always remember to cancel your open orders, especially stop losses, when you exit a trade with a profit. Or if you take a stop on a trade, always remember to cancel the limit sell order. And same thing if you're shorting. If you're shorting and you have a buy stop protection order, cancel that order. So the moral of the story is always remember to cancel your order. GTC order will stay in the system till you close it out or till the trade is executed. A day order will expire at the end of the day. Usually you can't place a market order overnight unless the market's open. The system will kick you out. If you can, you're gambling because you don't know where the market or the asset will open, and you can get filled at a really bad or a really good price. It can work either way. But the key is always remember to cancel your order if you don't get filled or if you get filled on a different order. So if you placed a market order and you get filled, cancel your limit order. If you got your limit order filled, cancel your stop order. Cancel your stop loss orders. Go through your system every day at the morning and in the afternoon and check your GTC orders every time. I guarantee you if you do that, it'll help you avoid a lot of problems. All right, if you guys enjoyed these videos, let us know. Subscribe to this channel. Send me a note below and I'll respond to it. I'll talk to you soon, and don't forget to visit wealthpress.com.